Hi, I'm Max Keiser. This is the Keiser Report. There's another big battle going on between academics and economists versus people who really know something about the economy and the way markets work. Stacy Herbert, tell us more.
Max, well, we just came off Thanksgiving. That's my first headline, Thanksgiving tally. Lunatics and hacks win as gold up 19.3% year-to-date, S&P down 7.5%. So this is from Zero Hedge, and they're referring to Nouriel Roubini, who called those who believe in gold as lunatics and hacks. Of course, they show this chart where you see the S&P is down 7.5%, gold is up 19.3%, and yet from the propaganda pushed by the media, you would think it was the opposite.
Right. Well, Roubini is an academic who has models that he believes the economy should fit into, but it never works out the way his models suggest. And as a result, he gives horrible advice in terms of what the policy makers should do. He's one of these guys that thinks that the status quo needs to be preserved. Just keep doing more of the same, but do it bigger. That obviously, he's one of these guys who is digging a hole. His solution is to keep digging.
So let's turn to this next headline from October. I want to turn back to something about Nouriel Roubini. Economist Nouriel Roubini's firm is for sale. It has over 85 employees and is still losing money. According to the article, Max, the firm is projected to have revenues of $14 million this year, and it will post a loss of roughly $2 million, and projects 8% revenue growth into next year, followed by 40% revenue growth in 2013. So he's lost money year after year after year after year after year after year after year. Okay, we know that. But look at his projections for 40% revenue growth in 2013. It could be true, Max, if you look at the fact that technocrats around the world are taking over where democratically elected leaders used to be. So technocrats would, in fact, hire the likes of Nouriel Roubini because Nouriel Roubini provides research that validates their false theories.
Plus, we predicted that technocrats and banksters would take over these economies because the markets in the economies that are underlying them are broken. And just like when a watch or a clock breaks, you can predict what time it will tell at any given time in the future because it's broken. Same thing with these markets. They're not functioning as price discovery mechanisms. They're simply totally shattered to smithereens, and they're being used as a front to channel wealth out of the mass constituencies of the people into the pockets of the few and their useful idiot frontmen like Roubini.
And now, Max, I've talked about the technocrats taking over in Europe, and here is a prediction you predicted right here on the Keiser Report, and this is from the Financial Times, the short view by James McIntosh, and apparently, the European Commission released a paper in which they suggest one of three solutions to the debt crisis, and guess which one of them is?
Well, I know, because I read the FT. They are suggesting that Italy and other Eurozone countries put up their gold to collateralize a new round of fake bonds collateralized by now. They want to pick the pockets of these countries for their gold. I predicted that. How could I predict it? Because these markets are essentially broken and we're watching a kleptocracy. It's very obvious to predict how a cancer will predict because it's cancer. So therefore, kleptocrats, of course, will want to steal Italy's gold. That was easy to predict because they're kleptocrats.
Well, according to the article, Italy has the third biggest reserves of 2,451.8 tons, worth almost 100 billion euros. If that was used as collateral for the first lost portion of a bond, say the first 20%, it could support issuance of 500 billion euros. Coincidentally, Italy needs 498 billion euros to repay maturing debt between now and 2014.
Right, yes, the numbers work out elegantly because that's what happens when you start talking about gold and silver. They're quite precious and elegant by their own existence. But here's what I wanted to say about that. You see, the gold used to collateralize all of these euro bonds would in fact make the Eurozone and the euro somewhat attractive over the dollar because the dollar really is backed by nothing. And there's about 10,000 tons of gold in all of Europe. So the U.S. would have to retaliate by attacking the Eurozone. And in fact, they are waging a preemptive attack on the Eurozone by selling off Eurozone bonds right now. That's why you have these so-called bond vigilantes in Europe attacking these countries right now, because they fear that Europe will go to gold, and this will suck capital out of the U.S. even more than is being sucked out of the U.S. So the currency wars are on. They're happening now.
Well, a few things there. Okay. Now, in fact, I think it's the opposite in terms of the elegance of gold. I think it's the elegance of criminal rackets. And I think the design was, we see that Italy has 2,451.8 tons of gold. How can we steal their gold? And conveniently enough, exactly the precise euro amount they need is the exact euro amount of all of their gold. I think that's a way to steal, to take their gold. It was precisely designed like that.
That's right. Italy has their own gold, by the way, unlike Germany, where 60% is held in New York.
Yeah.
So if they go after Italy's gold to buttress the euro bond, this will trigger Germany's panic of their own gold, which is held in New York, and that we're going to see even more tension between Germany, the U.S., and the U.K., All the animosities from World War II, of course, are still festering.
And the other thing is, you said that of a gold-backed euro bond, I think that's a way to steal the gold of Europe. Instead, a better method for Italy would be to drop out of the euro and have a gold-backed currency, a gold-backed lira. That would be a way better strategic move on their part in the currency wars.
Of course, that's why they very quickly put in this guy Monti to run Italy, instead of having somebody who is representative of the people's interest. You remember, his nickname is Three-Card Monty. He likes to shuffle the cards around and hide the money and steal all the money because he's a charlatan.
And of course, I mean, the FT does note that this plan of backing the euro bonds with the nation's gold, it might even backfire as investors wonder if losses could exceed the 20% covered by the gold. Of course, the losses will exceed 20% because the plan is to take the gold.
Yes, of course, ultimately, the kleptocrats just want to steal the gold because they realize that in this deleveraged world of collapsing fiat currencies, he who has the most gold wins. And the central banks, of course, are aggressively buying gold for the first time in 40 years.
With that, Germany, of course, has the biggest gold reserves in Europe. As you say, they are all held mostly in New York. Germany's auction disaster stirs crisis concern. So Germany failed to get bids for 35% of the 10-year bonds offered for sale last week, propelling borrowing costs in Europe higher and the euro lower on concerns the region's debt crisis is driving away investors. Mark Grant, a managing director at Southwest Security, says this auction is nothing short of a disaster for Germany. If the strongest nation in Europe has this kind of difficulty raising capital, one shudders concerning the upcoming auctions and other European nations.
Yes, and the thing about that is that Germany has been very critical of this idea of the ECB issuing bonds and then having the ECB monetize those bonds, buying back their own bonds. But as a result of this failed auction of bonds, the Bundesbank has been actually buying back its own paper in the open market. So Germany, what's good for Germany is not good for the Eurozone, apparently. Again, showing this incredible split between Germany and the rest of Europe and the rest of the world, because they're pursuing self-interest really at the expense of everyone else now. Germany is out of control.
So German yields are higher than the UK's, which is just unprecedented. And of course, if you know that just even a cursory glance of their economies, the UK has no economy, literally. It's just financial fraud, and that's it. Germany has an economy that actually builds wealth and creates wealth, and yet their yields are higher than the UK's. This could be part of the financial war. We know Merkel and Cameron are in a little bit of a tit for tat.
Well, you know that in the currency war, the objective for every country is to drive their currency cheaper, down lower, beggar thy neighbor. So the fact that the UK is trading above Germany shows that they're losing the currency wars. The idea is to get it cheaper. So they're losing. On the surface, it looks like that's a good thing, but actually in the currency wars, in this particular phase, it's a bad thing.
Well, speaking of currency wars, a lot of them we refer to as monopoly money, correct?
That's correct.
Well, as investors flee Groupon, outlook for IPOs darkens. So according to data from Renaissance Capital, the technology sector has seen 41 IPOs this year with an average first-day pop of 20.3%. Year-to-date, however, the group has lost about 13.1% in value. Explain this, Max, as part of the scam you say that these IPOs are.
Well, the Groupon IPO, we've been saying on this show for weeks now, leading up to the IPO, that it was a Ponzi scheme. It's a well-documented Ponzi scheme. Everyone in the financial press and on Wall Street knows it's a Ponzi scheme. But going into the IPO window, they have this first-day pop that's manufactured by Wall Street as bribe money, as currency money to pay off litigants, to pay off politicians. We know that insider trading in Congress is legal, so they give that to the congressmen, and they're trying to curry favor to deregulation. And then afterwards, within a week or so, as insiders get out of this piece of garbage that went public, the stock, of course, collapses. Now, in the case of Groupon, it's down well below its IPO price, and this whole IPO market has been completely undermined by the interest of the kleptocrats on Wall Street. Now, this is interesting because the big one, the mother of load of this whole window of IPOs, Facebook, has yet to go public. And this, of course, is Goldman Sachs' year maker. If they can't get that piece of garbage out of the IPO window, there's going to be a lot of unhappy Goldman Sachs partners. They've already broken the law at Goldman Sachs by giving stock to insiders beyond what they're allowed to by SEC law, and they must take it public or they will be definitely in breach of the law. But of course, what they'll have to do is give some IPO stock to congressmen to rewrite the law, because that's the way it works on Wall Street. If you break the law, just rewrite the law, and you use IPO money to bribe them.
Well, finally, Max, there's a big strike, national strike tomorrow in the UK, and I want to finally end on this headline because it goes with our first one where we see gold is up 19.3% for this year. UK incomes fall 3.5% in real terms. ONS reveals, this is the Office of National Statistics, and they say that there's a big fall in salaries for average workers and sizable rises for senior managers, according to the annual household earnings survey. UK households are facing pay cuts in real terms of more than 3.5% as salary increases fail to keep price with inflation. So wages are only up 1.4%, inflation is 5%. Max, we here at the Keiser Report have said that workers should tie their wages to money supply. As you see, with gold up 19.3%, it's keeping pace with real inflation. Directors and chief executives of leading organizations enjoyed the most sizable pay rises, with median earnings up 15%.
That's exactly right. People need to understand that the top 1% ties their wage to money supply growth, and the bottom 99% tries to keep their wages tied to something called inflation or the CPI numbers, which are useless. They're cooked up by government to hide the fact that they're getting screwed. If you want to be pari passu with the top 1%, you need to fight for wages tied to money supply growth. Money supply growth up 15, 20%, so should your wages. That's what the top CEOs do. They say, look, money supply is up 20%. I need a 20% rise in my wages plus a 20% bonus plus a 20% back-end bonus on top of that. So if you want to understand why you are so miserable and why your life sucks so badly and why you're such a loser, it's because you're tying your wage to inflation and CPI numbers instead of money supply numbers. Okay, Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Don't go away. Much more coming your way, so stay right there.
Legend has it that the devil watches you every single moment and waiting for you to stumble.
I saw a man with a video camera, so I moved over and he followed me.
We realized they were following everyone from early in the morning.
The only chance to get rid of him is to reveal him. The Devil Operation on RT.
Welcome back to the Keiser Report. I'm Max Keiser. Time now to go to Ireland and speak with Mark O'Byrne. He's the Executive Director of Gold Core. Mark, welcome to the Keiser Report.
Hi, Max. Thanks for having me on.
Fantastic. Now, Mark, the European Commission has suggested that weaker European countries could back their bonds with their gold that's in the Eurozone. Do you expect at the end of this crisis that most of Europe's gold will have been transferred to the very banks that caused the crisis?
Well, it's quite possible. The bottom line is the amount of debt that we have in the world. I mean, we tend to get fixated on the day-to-day developments, and one week it's Greece, the next week it's Italy, Spain, and today now the S&P and the IMF are focusing on Japan, and people are sort of focusing on the trees and not seeing the wood, and the wood is that we have a global debt crisis. The amount of debt that's in the world is just astronomical and has increased since 1971 very, very gradually until recent years where it went exponential. And basically the levels of debt are so huge that even if they did try to back currencies or bonds, the whole notion of backing, backing the bonds, the collateral. I mean, looking at Italy has about 2,500-3,000 tons of gold. It's tiny, it's infinitesimal vis-a-vis the debt that Italy has. But I think it is ultimately. I think that people will demand some sort of collateral like that because they're not going to trust bonds. Obviously, are no longer risk-free. If the German government has to print money to buy their own government bonds, German bonds, which are considered one of the safest bonds in the world, then obviously I think it is very likely that gold will ultimately have to back both bonds and maybe in time even currencies. And the bottom line is that it means that the price of gold will be revalued.
Okay, that's an interesting observation there. You're saying that it's a two-step process. First, you may find gold-backed bonds in Europe, in Eurozone, as a precursor to gold-backed currencies, which a lot of people are now talking about as the only viable solution going forward. Mark, talk to me about the golden pyramid and how it relates to what we're seeing in the global bond markets and the financial system.
Yeah, it's something we've talked about for a long time. About 2005, we did a research piece, The Beginner's Guide to Investing in Gold, because we wanted to educate the common man as to the importance of owning gold, because gold was rarely, if ever, covered in the mainstream media. So we started doing research ourselves, and we quickly realised a good way to explain things to people was through this gold pyramid. And the pyramid is basically the various ways that you can own gold. At the top of the pyramid is the most risky form of owning gold, which is the likes of futures and options, which are very highly leveraged and highly speculative, risky instruments. And then as you come down the pyramid, you would have, say, junior gold mining stocks would be up in the top part of the pyramid, and then you come to the mid-level of the pyramid, you would have the likes of ETFs, which have just been introduced around that time. And then the further you go down the pyramid at the base, that's where there is more safety. So then you get into digital gold, you get into personal allocated accounts, and then at the very base of the pyramid, which is your ultimate foundation, is actual physical bullion and taking delivery of physical bullion. And for a long time we've advocated that is, there is a lot of counterparty risk in the world, and the whole point of owning gold, silver bullion is that you try to reduce that counterparty risk. And this has been graphically illustrated quite recently with Gerald Salente and what happened with him in MF Global. And I think we're going to see more of that sort of scenario in the coming weeks and months.
All right, Mark, I was just in Ireland, and during the time when the government of Ireland, the new government of Ireland, made the decision to pay €750 million debt back to Anglo-Irish, a bank that no longer exists. And, of course, this was an unsecured debt, an unsecured bond. So a couple of questions. Number one, are the Irish people who see their own government acting in such outrageous corruption by paying off dead banks unsecured bonds, is that scaring them to understand, or I wouldn't say, just enlightening them a little bit about the fragility of the banking system, and that's moving more movement into precious metals? And number two, you mentioned MF Global. And, of course, J.P. Morgan's involved with that intimately. They're just stealing deposits. They're stealing people's wealth right out of their accounts. All across Europe, people are pulling money out of the thieving banks. Is this driving a lot of the movement into precious metals? And if so, is there a tipping point where the bank's own larceny kills them? You see what I'm saying? Like they're stealing money outright, and people are taking deposits out. At what point do they just collapse under the weight of their own fraud, Mark?
Yeah, absolutely. There is that risk, but it almost becomes a self-fulfilling thing, because people increasingly do distrust the system. In Ireland, it's very slow. I'm amazed people are very slow to join the dots. And even today, a lot of the debate is, oh, well, we're worried about the euro. People dismiss it, knee-jerk reaction, we won't go back to the punt, it's highly unlikely. Well, maybe we'll put our money into sterling, or maybe we'll put our money into dollars, or put our money into some other fiat currency. And people aren't joining the dots and seeing the global nature of this crisis.
But Mark, let me jump in here for a second, because you say people are slow to connect the dots. It's institutional fraud conducted by a parade of institutionalized banksters who are trained in the art of deception. In Ireland recently, they realized the fraud and deception in the Catholic Church as part of the Murphy Report and the pedophile scandal, and they pulled their embassy out of the Vatican at great political risk. So why can't the Irish people see the same kind of financial buggery going on in their financial institutions, enough to pull out of the financial institutions? Why can't they make the connection? They're getting used and abused by the same types of people. Why are they so slow to accept financial rape in this case? What's the problem? Why can't they see that?
I think it's an interesting parallel you're making there, but with the Catholic Church, it was very, very obvious, and there was very few people, propagandists or people for the Catholic Church, who could justify what the Catholic Church did. It was very clear, very obvious to people. Whereas on the banking side, there's still a lot of people who, whether it's Stockholm syndrome I've heard you talk about before, or whether it's just they blindly believe in the system, and there is almost an element of, don't rock the boat. We don't want, if we warn about these things, the natives might get restless and they might take their money out of the bank type of thing, And so there's a lot of, I suppose, the experts, the so-called experts who actually got us into this mess, many of them, both in the banks, the economists who would speak on behalf of banks, economists who would work for certain institutions, the people in the media themselves, they tend to completely underestimate these risks and lull people into false sense of security. And I think that's a large part of the problem, that if the people realise the reality of the situation, then a lot of them would take their money out of the banks and they would put it into professional hands to protect themselves and their families, And it's unfortunate because if they dealt in reality over the last 7 or 8, 9, 10 years, then we may have got rid of the access to the banking system, or we might have tackled it, and there might be some sort of democratic control, but that never happened, and therefore the imbalances are getting worse and worse all the time, and then also ultimately it does mean that Paul Krugman himself warned about 2 weeks ago, who's the great Keynesian economist who's telling us everything will be fine if we print money. Now he's warning about gigantic bank runs. And I thought that might be a warning bell for people, but even that didn't seem to waken up some of the so-called experts. So there's still I suppose a bias towards the status quo. People are saying, well, we'll get through this ultimately. Don't rock the boat too much. Don't worry about things. We don't want to be scaremongering, and it's total nonsense. I mean, we have to deal with the reality of the situation, and it's important to be positive and realise we're going to come through this. And we need to be realistic about the situation that confronts us.
Let's talk a little bit about gold. How much gold does Ireland have, if any, Mark O'Byrne?
Little or none. I think there was talk at one stage there was 40 or 50 tons, but whatever gold we have, I think it's well and truly with the ECB or the Bundesbank at this stage. But I think that I have people who have put in requests on the freedom of information and have seek to find clarity about the reserves. But like a lot of central banks, obviously they're not very accountable, and there's a huge lack of transparency there. So we don't actually know, and unfortunately the hard questions don't tend to be asked of the central banks.
Okay, so it's not like the recent revelation by the new government that they thought they had a multi-billion-dollar hole in the balance sheet, but now they found a multi-billion-dollar credit in the balance sheet, and I believe they pointed to leprechauns as the reason for that sudden discovery. So maybe they have the gold in Ireland. We'll have to ask the leprechauns. Let me ask you this about Ireland. Are they going to be the first to leave the euro? It doesn't sound like they've got the spine for it. What do you think?
At this moment in time, I think ultimately it will become a fait accompli in the medium to long term. But right now, I I think the new Fine Gael government is quite akin to the Fianna Fáil government. There's lots of the same advisors there in the Department of Finance. These are the people who helped get us into this mess, you know. They don't seem to have learned any lessons whatsoever. And unfortunately, the new government seems to be taking advice from both themselves and from other so-called international experts who tend to not really have the national interest at heart, should I say, and tend to have more global financial and banking interests at heart. So, I can't see that changing anytime soon, unfortunately. But I think what may happen is that the Germans may precipitate things, and obviously they may opt to go back to the Deutsche Mark. I think that may be a more likely scenario than the Irish going to the punds. Or sorry, the other thing is obviously the Greek situation. I think the Greeks, it looks almost certain that they will go back to the drachma, and there may be a case that the ECB tries to make an example of Greece, put them on the drachma. They experience what happened to Iceland and possibly worse, as an example to other people who may be considering going back to their local national currency.
So when the Irish government recently was begging the IMF for a little debt relief, quite, embarrassingly so, is that just for lip service? They don't really mean it, right? Because they'll do whatever the IMF tells them to do. They're not actually going to impose any kind. They're not like Iceland, right? Ireland is not Iceland. They don't know how to stand up to a banker, right? That's pure lip service. We shouldn't take that in as a best efforts at all, correct?
Well, I hope to God it's not lip service, but so far a lot of what they've been doing has been lip service, and they haven't seemed to, know how to negotiate. I mean, they have to threaten, and they have to have the real. I mean, I think that what they should have been doing is they should have been printing funds. They should have had the plan B in place, whereby it's a realistic threat that unless these debts are absolutely odious, it's outrageous that Irish people should be bailing out German banks, French banks, and British banks. And that's what's happened. And people say Ireland's been bailed out. Ireland has been bailed out. The Irish people and Irish taxpayers are bailing out these international banks. And the Irish government have been a bit slow to realise that, So the bottom line is that the Irish people are beginning to wake up to it. And I think we are no more spineless than anyone else in the world. It's a lack of awareness and people being led by their nose. They don't actually know the reality situation. But that is beginning to change. And we do. But yeah, we do need our leaders to step up and to defend our national interests and to look after the citizens of our various democracies.
Well, you can create a new county in Ireland, County Austerity. All right, Marco Byrne, we're out of time. Thanks so much for being on the Keiser Report.
Thank you, Max.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, Marco Byrne of Goldcore. If you want to send me an email, please do so at keiserreport@rttv.ru, or you can follow us, Keiser Report, on both Twitter and Facebook. Until next time, this is Max Keiser saying, hi, y'all.